This is mad charge. This is mad charge. If you asking, I will take the mask off. Can't match this if you don't have that heart for the passion. Money takes action, and this is why I blast off. This is mad charge. If you asking, I will take the mask off. Can't match this if you don't have that heart for the passion. Money takes action, and this is why I blast off. This is mad charge. Yeah. This is mad charge. This is mad charge. I'm running the game, I'm done with the same. Been numb by the pain, numbers remain, it's fun, it's a game. I've been loving since I started trading number one. Had to tell me when you're done. Hating everybody, waiting for death in my breath. I'm alive. If you haven't bled, you don't know what success is about. Push through the pain, and late nights, just to change for my days like. Pour my heart out on my passion, so my legacy is lasting. Till the end of me and asking how I'm using Forex to get my cash in. Make it pouring like it's magic. Dreams are used to make it happen. Make it happen in real life, because that's what I'm about. People used to laugh at my mask, at all the things I was after. But tell me who's laughing now? This is mad charge. If you asking, I will take the mask off. Can't match this if you don't have that heart for the passion. Money takes action, and this is why I blast off. This is mad charge. If you asking, I will take the mask off. Can't match this if you don't have that heart for the passion. Money takes action, and this is why I blast off. This is mad charge. This is mad charge. If you asking, I will take the mask off. Can't match this if you don't have that heart for the passion. Money takes action, and this is why I blast off. This is mad charge. If you asking, I will take the mask off. Can't match this if you don't have that heart for the passion. Money takes action, and this is why I blast off. This is mad charge. Yeah. This is mad charge. mad charts. I'm running the game, I'm done with the same, been numb by the pain. Numbers remain, as fun as a game. I've been loving since I started trading. Number one, addict, tell me when you're done. Hating everybody, waiting for death with my breath. I'm alive. If you haven't bled, you don't know what success is about. Push through the pain, late nights, just to change for my days like. Pour my heart out on my passion, so my legacy is lasting. Till the end of me and asking how I'm using forex to get my cash in. Make it pour it like it's magic. Dreams are used to make it happen. Make it happen in real life, because that's what I'm about. People used to laugh at my mask, at all the things I was after. But tell me who's laughing now? This is mad charge. If you asking, I will take the mask off. Can't match this if you don't have that heart for the passion. Money takes action, and this is why I blast off. This is mad charge. If you asking, I will take the mask off. Can't match this if you don't have that heart for the passion. Money takes action, and this is why I blast off. This is mad charge.
Yo. What's happening? Can everyone hear me? Type in the chat if you can hear me, please. Okay, perfect. Everyone can hear me? There we go. What's happening? How's everyone doing? Everyone's good? There we go. Okay, so where's everyone from? Okay, cool. There's a slight delay on my end, but that's no worries. It's great to have you guys here. So, first and foremost, very warm welcome to you to this free trading webinar. I really want to say thank you everyone for joining. Now, the reason for this trading webinar is just, yeah, man, it's been a tough year so far with the trading industry. So I would really just want to hop in through with what common questions that traders have. So very warm welcome to everyone. I see we've got members from all over the world. That is amazing. I really want you guys to try and take notes. Try and really take notes. Go to a calm place, grab a piece of paper and a pen, and then just focus on what I'm trying to explain to you with regards to the trading. I'm going to run through what is going on in the industry. I'm going to run through what is going on with the brokerages. I'm going to run through with what's going on with the prop firms, and then also just going to, obviously, as you guys know me, throw in a few nuggets here and there. All right. So first things first, we obviously got to go through a few house rules. I don't really like people asking questions while I am discussing the content, because I think then it is a bit distracting in the sense of me trying to explain to you guys what I'm trying to say. So it's a bit distracting to the point of, like, I don't want you guys to feel that we're hindering from the point. So when I'm running through something, please just understand that it is for a certain, I have a certain goal with each and every concept. Okay, so grab a piece of paper. The house rules is no questions. Okay, that's the first house rule. Second house rule: smash that like button. I really appreciate the support. Then we can do this. We can make this a recurring thing. So your support means the world. I'm not asking you for anything else. Just smash that like button now. Do that now if you haven't done that yet. And then without further ado, let's hop into let's hop into what this webinar is all about. So first and foremost, what you'll learn today is we're going to run through the trader failure rates. Now, going through the trader failure rates, it might scare off some beginner traders at first, but that is not my goal here. My goal here is to let you understand why a lot of traders fail, and then I'm going to tell you bluntly and boldly that you're not going to be part of that statistic anymore. Why? Because I'm going to show you what they do wrong based on practical audited research, and then I'm going to show you how you can stop doing what you're doing wrong, what I did wrong, what everyone else is doing wrong. Remember, I'm just a normal trader. I made the same mistakes you guys are making. I've been there. What separates me from someone else is just that I just put my head down and I worked. I didn't stick around in a flashlight and chased clout or anything. I just stuck my head down and I worked, and I went through my mistakes. I humbled myself in the sense of understand what I'm doing wrong. Secondly, we're going to run through trader challenges. That goes hand in hand with step number 1. Step number 3, I'm going to explain to you the interbank market, uncover the mechanics behind the interbank FX market. There's a big misconception with the interbank market, and we're going to squash this tonight. We're going to run through the market volume. We've got a lot of time tonight. I really want to run through everything. There's nothing rushing us tonight, so this is going to be recorded so you can run through everything on your own time. Then we're going to talk about the elephant in the room, which is CFD trading. There's a lot of misconceptions with CFD trading. If you're new, don't worry, I'm going to discuss everything step by step. I'm going to take you by the hand and I'm going to take you through it. So you've got nothing to worry about. I'm not here trying to sell you anything. I'm not here trying to stroke my own ego. I'm here to humble myself. Because why? Because when I struggled back in the day and debt collectors was literally my ringtone, I had nobody to take me through this. I only had one guy. He was my mentor. He helped me. He believed in me when I said, listen, give me a shot. So this is me giving you a shot. I'm taking you to the water. I'm literally forcing your head down to the water to drink. You just got to open your mouth and drink, buddy, okay? That's all you got to do. So I'm giving it to you, not selling anything. This is completely free, recorded. You guys can go ahead and watch. Like I say, I'm not putting a crown on my head and saying I'm this perfect trader. I just want you guys to stop making the same mistakes I did and stop making mistakes that I see you guys still making. That's been flooding my DMs and my emails, and I appreciate the support, by the way, but I mean, sometimes it's got to stop. I want you guys to succeed. I want you guys to win. Okay, so this is the only way we got to do this. I've got to walk with you guys the walk. We got to talk the talk. We've got to have the serious talks, and we've got to walk the walk. At step number 6, we're going to talk trading with a prop firm. That is very lucrative these days. And then common trading questions that I get. And then last but not least, we're going to have a super massive giveaway, which I'm very excited about. So having a look at the trader failure rates. Okay, once again, this is not to scare you guys. This is just to give you guys education, provide you guys with insight, because lack of education can be the biggest mischief in your trading. If you have lack of education, but you're out there stroking your own ego, that's not a good thing. Okay, you gotta understand the digits. You gotta understand what's possible. Yes, you can make a beep ton of money. Okay, beep is my way of swearing because I mean, you can really make a lot of money, but you've got to understand the possibilities. Okay, so I don't know why there's a dollar sign on the left, my bad, but in the first month, more than 80% of traders fail. Can you understand? Can anyone tell me why that is? Hold that thought. In the first year, 40% of traders failed. Now that is after the more than 80% failed. Okay. In the first 3 years, 80% failed again. So you can only imagine we're now down to close to over the 90% fraction of traders who fail after they started in their first month. So think of it this way. You're a group of classmates. You're all sitting in a class. You are down to the last 3. So you've got to make the decision. Are you going to stick with it? Are you going to make it work? Or I mean, are you just going to fail like the rest of the people? Okay, so with the last 5 years trading, the rest of the 80%, they fail. Okay, take that into consideration. So I want you to read through this. Only 40% of traders surviving the first year, and the rate climbing to 87% and 93% at the 3-year and 5-year marks respectively. So what I want you guys to do, homework. Go on your phones, go on Instagram or YouTube, look at what everyone else is doing. Look at what everyone else is doing. And then I want you to write it down, and I want you to make a separate column. And take this serious. Create a separate column or a brain map, whatever works for you. And you write what you're going to do different. For example, you see everyone trading trend lines. What are you going to do in your second column? You know? So you have to go and think in the first month. Obviously, guys, it's super easy. Go on YouTube, type in how to trade Forex. What's the first video that's going to come up? It's going to give you this and that, and then flaunt you with money. Like I always say, yes, you can make a sick amount of money, but you have to educate yourself first. The boring part has to come first before you can eat like a king. Okay? You have to work like a slave before you can eat like a king. And you have to do this because if you don't work for something, you don't appreciate it at the end of the day. You don't value it as much. If I'm coming to you and I'm giving you a free strategy that's going to make you a millionaire overnight, you're not going to appreciate it that much because you literally just received it while you're having your first cup of coffee in the morning. You're not going to value it that much. So you need to sweat, you need to cry, you need to be frustrated, but let's disregard the crying and the sweating, because that's what I'm here for. I'm here to take away the bad emotions and fill you with the learning emotions. That is my job here. Okay, on to the second slide. I'm trying to run through it so we can have some practical examples and we can hit the nail on the head with every single problem that you guys might have. Like I said, questions on the end, please. So the common trader challenges is emotional control. Let's read this together. Fear and greed can lead to premature trade closures or overtrading, resulting in significant losses. We've all seen this, right? You can enter a trade and you can see that the market is going too much against you. It's not a great feeling because you worked hard for that money and you can literally see it flashing away in front of your eyes. You can literally see the market eating your capital up, your hard-earned money from the get-go. It's not a beautiful sight to have. So your solution is develop a solid trading plan. I'm going to do that with you, with clear entry and exit points, and adhere to it strictly. It's like driving, folks. It's like you can't go against the rules one day and then as soon as you get a traffic fine, you change your strategy. It's not going to work. You have to stick with the rules that's set out for you, that's been tested, that seems to be viable, that's quote unquote audited, and you have to stick with them. Practice mindfulness and engage in stress relief activities to maintain emotional control. A lot of big words, I know, but at the end of the day, let this entertain the fact that you are going to make money in this. Like I said, the boring part has to come first before we're going to jump into the beautiful part of it. Risk management. New traders often overlook the importance of managing risk, leading to catastrophic financial consequences such as failing to use stop loss orders. We've all seen this. I'm probably the guy that likes admin the least. You can ask my wife. I don't even like to look at a menu when I'm at a restaurant. That's how much I hate admin. So managing risk is something that sucks, but it's something that saved me, because I understand my win rate is not going to make me money. I understand my risk to reward ratio. For the new guys, we're going to run through that, but I understand that how many trades I win, that's not going to make me money. Okay, yes, it plays a big factor, but you need to have an edge, and we're going to discuss that. So your solution to that is implement strict risk management strategies such as setting realistic risk to reward ratios and using stop loss orders. Diversify your portfolio. If you don't know about diversifying your portfolio, I'll give you a trading plan which discuss at the end of the trading plan how I diversify my portfolio. I have 3 accounts, and in this trading plan that you guys get for free, you guys can see how I diversify my portfolio. And this diversify portfolio is that I learned from a friend who now trades with Goldman Sachs, one of the biggest hedge funds in the world. And he said, MC, the reason you're struggling is not because of this and this and that. He said that just diversify your portfolio. And it helped me tremendously because I had one account that was for my daily transactions. I had one account for my bigger purchases, and then I had one account for like investments and stuff. So I knew with my small account I can take bigger risks with regards to trading. My big account, I need to take much more calculated risks. It's like anything in life. You need to save, and with your salary you can budget to make certain purchases. It's exactly the same with trading. Trading is just quote unquote your separate bank account. See it like that. Lack of discipline, we all know this. I'm not really going to discuss this because you have to understand why you have a lack of discipline, but the reason that lack of discipline is not going to happen overnight. Can anyone tell me why I cannot just teach you discipline? Because discipline comes with implementation, and after implementation comes with repetition, and after repetition that equals knowledge, and then that will ultimately result in discipline. So you have to implement, and you have to be repetitive with your implementation process. And then this brings me to my next page, which is knowledge gaps. So of course, trading is super lucrative. You see this one guy making loads of money in this fancy car, wearing clothes. You see this young guy. Of course, it's going to seem super lucrative. I won't lie. Who will you trust? Stopping next to a guy in an old Toyota Corolla saying he's making a lot of money with trading, or a guy in a super wrapped out Ferrari saying, listen, this is me, this is what I'm doing to make money, and he's younger than you? Who are you going to believe? Now, as sickening as it is, we chase materialistic things, and it's not right. I'm not saying it's right. I'm not condoning that we should do that. But the proof is in the pudding. Why are you driving an old beat up car if you're making this much money? You know what I mean? So it all just goes off with who are you listening to? And I think that's the biggest misconception that we guys have. I'm not bashing anyone. I'm not going to bash anyone in the future. I'm in my own lane, and I need you guys to stay in your own lane as well. I don't care what industry or career you're in. Stay in your own lane. Just continue doing you. Okay? So with the knowledge gaps, that's what I'm here for. I'm here to give you the right knowledge, and I'm here to help you to practice on demo accounts or do the right research, or I'm here to address your problems head on so that you can start with making money, getting that bag immediately. Finding a reliable strategy. Now, this is what we're going to discuss at the end. I'm going to help you to formulate a strategy, because here's the thing. Trading is a mentoring game. You can't jump into trading and doing this alone. Trust me, I've been there, I've tried that. The reason that won't work is because you most likely have an ego. You most likely think that, I can do this thing alone, which might be true, but it will take you 10 years or 8 years. I'm not saying that disrespectfully. I'm saying that because out of experience, I have found that of me doing it alone, I'd rather find someone to help me. But it's not someone that's going to teach you a magical strategy, or someone that's going to spoon feed you how to make money. It's a mentoring game. It's not a coaching game. So with that being said, you need someone to be there, to show up daily, weekly, to show you this is what you need to do, this is what you need to refrain from doing. to talk you through the emotional process, to walk this journey with you 3 to 5 years down the line. Not someone to sell you this get rich quick strategy and off you go. It's not going to work like that, because the market is ever changing. Your emotions are ever changing. You are starting to become grown up with your thinking process, right? I want to see how you're thinking. I want to understand why you're seeing certain things that way. It's a constant battle between yourself and the markets, and you need to make sure that you understand who's in your corner with this battle. Managing winning and losing streaks. This is something I struggled the most, because yes, I had a massive win rate. I had a, let's say for example purposes, I can't even remember the exact digit, but let's say you have a 90% win rate. And then you're winning trades, you're raking in that money. You're telling your wife, listen, put on your most prettiest dress. We're going out to the movies. We're going out to the most expensive club or restaurant. And then boom, comes NFP or a big news event, or some president says something that the market doesn't agree with, and then off goes your trading account. What do you think the problem with that is? The problem with that is that you don't understand how to lose. You don't understand when to exit when you're losing. You don't understand that losing comes, but there's two types of losses in this game. One loss that you learn from, or one loss that destroys you, and that loss learns from you. You need to understand and dissect what type of trader you're going to be. Are you going to be the trader that humbles himself? You're making that bag, you're cashing in every month, but you're humble, you're on the sidelines, you're buying your dream cars, you're buying your home, your dream houses? Or are you going to be the trader that's in for the quick money, and then at the end of the month or at the beginning of the month when NFP comes, you blow your account? That's just something to think about. But at the end of the day, you want to minimize losses and rebuild confidence. Confidence is the name of the game, okay? Everyone's still with me? Let's get the chat going. Everyone's still with me? Everyone's still understanding what I'm saying? This is sick. We've got a lot of views here. I'm really loving the support. I'm really passionate about people wanting to express or expand their knowledge base. So understanding the interbank market. This is a huge misconception that traders have these days, because they think that the market is out to get you. Listen, the market does not care about your $1,000 or your $2,000, even your $100,000. They don't care about that, okay? They don't care about where your stop loss is. They're not out there to manipulate you. Now, let me give you a quick hint of what we're going to go through. I'm going to explain to you the virtual dealer plugin. So stick with me. That's something that MetaTrader uses. But first, let's take this step by step. The interbank market is crucial for traders as it influences the price movements of assets. That's it. It's not market makers and a bunch of traders sitting in a room and trying to flake you out or trying to manipulate you. That's not what it is. It is to provide liquidity. Market makers are not your enemy. They are there. To the new guys, what a market maker is, it is an intermediary who sets the pricing between brokers and traders. Okay, so it provides liquidity for large scale transactions. You get two types of markets. You get the future market and the CFD market. We'll get to that now. That brings me to point number 3, which is price discovery. Now, after you're creating global marketplace for financial instruments, which is in the tech space, with us being trading off from our phone, stuff like that, we're very blessed to be able to do that, okay? But it wasn't always like that. Back in the day when they traded futures, open outcry, when they traded with the pits, if you watch any old stock trading movie, you'll see these guys running around. It's not like that anymore. But back in the day when they used to do that, I couldn't pick up my phone and place an order on my brand new iPhone with my sleek looking MetaTrader. That's not how it worked, okay? So we're very blessed. But with that comes a lot of cons, and we'll run through that. Point number 3, I would like to talk to you guys about price discovery. Price discovery is the interaction between banks and institutions that shapes the market price of assets, influencing the price you see on trading platforms. This is not the case with CFDs, with MetaTrader, with the market that we trade on. I repeat, this is not the case with the markets we trade on. Understanding the interbank dynamics helps you anticipate price movements and make informed trading decisions. If you've got a notepad in front of you or anything or your phone, type this out. The market does not control me. The market cannot see my orders. I am trading CFDs. I repeat, I am trading CFDs. Okay, so what CFDs are, this brings me to my third point. But before we run into that, what CFDs are is it's literally just I'm going to scare off a few people, but it is a fake product that we guys are trading, and I'm trading it as well. But understanding this, you can use it in your advantage. So you get three types of main traders in this game, which they provide market volume in the financial markets. You get institutional investors, retail traders, which is you and we get algorithmic trading, which is very popular these days. So I'm seeing a lot of guys asking very beginner questions. If you're a very beginner, please don't stress. I'll provide you with a free course. I've created a free course from A to Z, which will take you any place to where you can understand these terms I'm using today. The link will be in the description. So with institutional investors, carrying on, you'll get large scale investors. Now they're up from 100 mil up, okay, even 50 million. These are some really big guys making some very informed decisions, but they generating a lot of market volume. So you will get iceberg orders and normal limit orders. I repeat, iceberg orders and normal limit orders. Now in these normal limit orders, you will find them anticipating market movements based on a certain level in the markets. Okay, based on, we'll jump to the charts right now, but you will find them, your limit order will obviously be either above the market or below the market, and they will wait for it to hit. They don't enter immediately. If they do enter immediately, they do it with fractions. Like, for example, let's just use this as an example, $2, $2, $2, $2. They don't enter $10 immediately. Why? Because the market will fluke and it will freak out. And then we as retail traders will understand their pattern. We will call ourselves smart traders, circle bank, baloney traders, and we'll sell a course and we'll make millions off from it. Okay, I'm just kidding. But at the end of the day, you cannot predict their patterns. That's what I'm trying to say, because they have very specific plans that they need to follow, and they're not going on Instagram searching for the guy with the sickest Ferrari and hiring him to trade for them. That's not how it works. They hire guys that studied at Boston, at some of the biggest universities in the world, Oxford. They're hiring people with PhDs, with very high degrees, and even they struggle. So you really need to find an edge in this game. Now, my goal here is not to scare you off. My goal here is to get you excited for what is to come, because if I can do it, if a lot of my members can do it, if a lot of my friends can do it, a lot of people that I have seen can do this, what makes us different? Then you can most definitely do this as well. I'm just hitting you with the truth rather than selling you a dream, so that you can face the truth and then live your own dream at the end of the day. That's my goal here. Okay, retail traders, which is you and I, we typically make smaller transactions. Like I've looked at some broker data, which, don't ask me where I got that, where the trading account differs from $100 to $1,000. That's the average trading account size. You know, the aggregate activity of retail traders can influence price trends, especially in volatile markets. I don't know if you guys watch The Big Short, or there's a lot of new movies coming out where social trends come out. Now that is like, if you find a bunch of traders in a group and they're running towards something, they're running somewhere in the streets, let's say in the streets, they're running somewhere, eventually you'll catch on and you'll say, listen, where are you guys running to? Like, I'm interested. Why are you guys looking so crazy? Like, what's that crazy smoke on your face? I want in. And then you jump in, your friend jumps in, your mother-in-law jumps in, hopefully not, and then everyone else just jumps in and they carry on with the trend. That's what happens with social trading and us as retail traders. If we stick together, am I saying now we should all in the signal group just jump in a trade and then just, if we buy, it's all going to buy? Definitely not. Okay, there's specific patterns that the brokers anticipate and exaggerate our price movements. Then at the end of the day, I would really want to run through this because this is not going to bring you in any money. This is just for description. Algorithmic trading. Automated trading platforms driven by complex algorithms are responsible for a substantial portion of market volume. Now this wants to bring me to a rant, okay? I really want to rant over here, because if the overall volume these days are from algorithmic trading, why the heck do you think that there's these traders that they condone not using indicators? Now, I'm not saying indicators are the holy grail, but I'm saying if algorithms are literally running up to close to 80% of the market, why are they saying that indicators don't work? And they're all saying it. And the failing number is 95. So, and they're all saying that this and that does not work. So I really want you to go and do the math here and really just think about it for a second as to how blindfolded some of us can get with the information we receive and the trust we put in certain people just based off from their word. Okay? Introduction to CFDs. Now, if you haven't gotten out your pen yet, I seriously hope you're getting it out right now, because CFDs, contract for difference, offers traders a way to speculate on the price movements of underlying assets without actually owning them. Futures, okay? We're going to run through futures right now, but let's say this is the same, or a great example of you buying a car, purchasing a car. Let's say we're a bunch of friends. We are just out of school. We want to go and buy a car. And we put the cash down. And the dealer says, okay, on your way now, off with you. And you're leaving without the car. Is that car actually yours or not? Most definitely it's not yours, because the dealers, you don't have the papers, you don't have the key. That dealer just literally took your money and he said off with you. That is not the same with trading. With trading, you don't receive a physical, tangible product, okay? You invest in something anticipating that it's going to go either up or down. Bullish, because the bull attacked with its horns up, or bearish, because the bear attacks, puts his head down first and then attacks down, thrusting its head up again after going down. You get certain other terms like hawkish, dovish, but let's stick with bullish and bearish for the time being. So with trading CFDs, you profit from price increases or decreases, but think about this for a fact, for a certain moment. If the price increases and you're making money, think about this for a second. Who is losing money? Someone on the other end of that deal has to lose money, because you're trading and you're speculating on something. So hopefully there's some light bulbs going on in your head. We're going to run through this later. But if the price increases and you're making money, who is losing money? Type in the chat. I would really love to hear your answers. Okay? So understanding CFDs and how they work and the mechanics thereof is really important for you. So why are you trading CFDs instead of futures? I have a background of trading futures, but I moved to trading CFDs because we have higher leverage. Now, if you don't understand what leverage is, run through the free course and you'll get a good understanding of it. CFDs offer leverage, allowing you to control a larger position with smaller initial investment. This allows me to take my $500 and enter a lot larger positions. Okay, a lot larger positions. We're getting some great answers in the chat. Thank you for that. And most of you are kind of getting what I'm saying. Long and short positions, you can go long, bet on price increases, or short, bet on price decreases, depending on your market outlook. Okay, this flexibility enables you to profit from both bullish and bearish market conditions. So you can literally, with an intangible product, you can profit from the market going up or down. You don't have to hedge or arbitrage your positions. You can either buy and profit from it going up or down. That's a great thing. Trading costs. CFDs involve spreads and commissions which are factored into your trading costs. It's essential to compare brokers and understand these fees before starting to trade. Now that is commissions and swaps and stuff like that. Okay, let's quickly run through this process. CFD brokers act as intermediaries, facilitating your trades in the CFD market. They provide platforms for you to open and close positions. Okay, so step number one is help with the account opening, they help with the trading platform, they help with order execution, and they offer with margin calls. Now this is what we see on what meets the eye. This is not actually something that is really going on in the eye. Now let me introduce to you, I can already see myself getting a lot of hate emails after this, but I'm doing this for you guys, and this is not me chasing clout. This is me opening your eyes, because this is what opened my eyes. I was stunned when I saw this. So you get something in the very dark world of trading called, just a quick disclaimer, I'm not here to scare you guys off. I'm here to speak the truth and help you guys, because there's some people here that's putting in some hard-earned money, some serious time in this, and it's about time that you win. Take up your hand and say, it's my time to win. Do it right now, because it is your time to win. The time for you being flaked out is long gone. The time for you being lied to, the time for you to make uneducated decisions, that is long gone. So pick up your hand and say, my time is now. Okay, so this is not to scare you off. If you don't know what MetaTrader Virtual Dealer plugin is, it's real. Go and Google it. It's real. It's scary, and it's some crazy stuff, but you can use it to your advantage, and I'm going to show you how. The MetaTrader Virtual Dealer plugin, from now I'm going to call it VDP, is a tool used by some brokers to manipulate. Some brokers is the wrong word. It's a lot of brokers to manipulate trade execution, creating unfavorable conditions for traders. This raises concerns about transparency and fair practices in the trading industry. Unregulated brokers. I'm not saying they're bad. I myself trade with unregulated brokers, but you have to know when and where. There's a time and a place for everything. Okay. Order execution manipulation. This is real. I've seen this in action. The VDP can intentionally delay order execution, leading to slippage that benefits the broker at the expense of the trader. I'm going to read it again. At the expense of the trader. That's you. That's me. Brokers using the VDP may apply asymmetrical slippage, where positive price movements are not passed on to the trader, but negative movements are. The VDP can assist brokers in managing B books, where they take the opposite side of client trades, potentially increasing the broker's profits. I don't know if you guys read my trading plan, but I discussed this in my trading plan. If you suffer from over leveraging or over trading or revenge trading, a broker operates in different channels. Okay, trust me, I know I'm busy with it as we speak, with opening my own prop firm. I literally have to talk with MetaTrader and get my channels ready. You have to compile a close to 100-page PDF where you have to give it into them for approval, where you have to classify your traders as certain channels. Am I saying I'm one of them? No, I'm telling you guys that understanding this, you can use it in your advantage. So if I see a trader making tons of money, I'm going to put him at the highest channel, okay? But if I see a trader really over leveraging and revenge trading, I'm going to put him at my VIP. I'm going to keep my eyes close on him, because I know every time this guy opens a trade, new Lamborghini in my driveway. Okay, I know that this guy is going to make me so much money because he suffers of revenge trading. That's bad for us as traders. Okay, I'm saying this to stir a fire in you, to make you guys angry, but the good angry, because your time is now. Okay, detection and avoidance. Traders can detect VDP usage by monitoring execution times and slippage consistency, and are advised to switch brokers if issues are identified. I can teach you how to identify this, but let's use this for another webinar where it's in live markets. I'll show you exactly how you can identify whether you are being manipulated by VDP. I can show you the exact way you can detect this. Regulatory actions are regulatory bodies who have implemented rules. This is CAP, they haven't, to ensure fair slippage practices, aiming to eliminate unfair advantages brokers might have exploited through the VDP. This is complete CAP. I don't believe that. That's not true. But nonetheless, understanding the VDP and its potential abuses is crucial for traders. Okay. So this is how the VDP looks. This is 3.1. I mean, I've looked at ones that are at version 4 already. Okay. So this is how it looks. It looks sort of like you can see on the top right, MetaQuote Software Corporation. It's through MetaQuotes. It's not. I didn't create this. Go on your Google and type this in. You can see for yourself. I have no intentions of giving you guys false information. This is real. So you can appoint teammates and giving them manager roles, giving them certain type of roles, admin, moderators, and they will literally stay up all night watching your trades. Am I contradicting what I said in the beginning? No. I want to repeat myself. No, I'm not. They are not watching your every single trade just because you're making money. They can't do that. They don't have the systems to do that. But they're picking up your patterns. What they can do is book you, and they can take trades against you 100%. But they can't move the market and let it hit your stop loss and then just go against you. That's BS. That does not happen. They book you immediately, and then they take trades against you, manipulate you, and then spook you out. But they don't move the markets. I repeat, they don't move the markets. So this brings me to a very I'm getting a question, is this only with MetaTrader? No guys, it's with every platform. I'm not going to give you guys false information. I don't know of the names of other platforms, but I mean, it's super easy to code this and plug it in. So there are some other platforms. I've seen some with, I'm not going to name names, but I've seen some with other trading platforms. So I just really want to touch on footprint charts and delta volume with futures, because I have been talking about it previously and I've been getting a lot of questions regarding this. This is a whole webinar on its own. Okay guys, so I'm really going to run through it. To the new guys, go and get yourself a nice cup of coffee, because this is just going to confuse the heck out of you. Footprint charts and delta volume futures. Footprint charts offer a visual representation of market depth and order flow. Okay, so when you look at a chart, I'm going to hop to the charts now. You see candlesticks. That is the language of the market. Okay, but by looking at the language of the market, you can also have the option to look at footprint charts and delta volume. Let's have a look at it. Okay, So this is my standard candlestick chart. As you guys can see, I have normal candlesticks. I'm on my daily chart, but let's go to the 30-minute, because the rule of thumb says with footprint charts we look at 30-minute. Now I do know for our convenience that TradingView has incorporated footprint charts lately, which is really good. Okay, these are not real footprint charts. Why are these not real footprint charts? Can anybody tell me? Because this is CFD. With futures we can trade real footprint charts. Now hold your horses before you get very excited. This is just me showing you something. So here you can look at the delta variance. You can look at the delta is 28, 63, 51. You can look at the total volume, which is 3,326. This is very descriptive and informative. And now what you can see on the left versus the right is what I talked about in the beginning, with the larger traders placing bids. Now these are bids, okay, but this brings us to our biggest problem with using these. You get something that we call bids, which is over here. This is the bids, and this is the iceberg orders, okay? Just excuse my writing. So this is the iceberg orders. Now once you get iceberg orders, you will eventually find yourself looking at trades, and then it will show up a massive volume right over here. But just before it gets triggered, you get spooked out and the market shoots the opposite direction. To who has that happened before? That has most likely happened to you before, because the traders, they place pending orders. They want you to see that there's an order, and as soon as right before the market hits that order, they take off their order. They create an iceberg order. What's an iceberg? If you go look at any image with an iceberg order, it seems like something that it's not. And then as soon as your Titanic crashes into that, then they just remove their trade, and then they got you in. You're trapped now. That's what we call trapped volume. Okay, so this is literally what I just wanted to express. Displays the distribution of buy and sell orders at different price levels, helps visualize market depth and liquidity, order flow, right? You can only find footprint charts with market level 2 data, and it provides a detailed picture of market activity. Now with delta volume, that's literally just providing you with the volume and the potential price reversals and breakout points. Okay, here's a pretty great illustration of how footprint charts work. You get different variations, but I really don't want you guys to focus too much on this, because it can really confuse you. And as I said, it might be inconvenient to you guys because I'm rushing through this, because it's not going to make you money. I want to give you guys some information that's going to make you money. Okay, so as you guys can see, it goes from right to left, but it goes from, let me use the other image. It goes from right, top right to bottom left, top right to bottom left, top right to bottom left. It doesn't go from left to right, left to right. It goes from top right to bottom left. Now as soon as you see that there's a level that does not have a zero, let's go back to a chart. As soon as you see there's a price level that does not have a zero at the top, what does that mean? That means that there's an imbalance. There's traders stuck at the top. So there's 161 sellers stuck at the top. They will continue trading up like we see a zero over here. That means that the market is satisfied at this level. But once there is a number there except for a zero, there is trapped volume. Okay, very interesting. So understanding futures contract. Now we already discussed. We have CFDs and we have futures. Okay, with CFDs you're trading the underlying price, but with futures you are trading the actual product. But we're going to run through now why I rather suggest CFDs over futures for the time being. If you're trading really large accounts, trade futures, because there's really incremental trading differences by trading this. But in the long term, you can see the massive differences. The expiration date, so futures contracts have a specific expiration date. This is you going to a dealership, you're placing down a deposit and you're paying the dealer off while you're driving the car, or you receive the car when you are finished paying him off. Okay, there's a slight difference with regards to these two. Margin requirements. To enter a futures contract, traders must deposit a certain amount of margin. So back in the day, you needed to have at least $100,000, not a prop firm account, actual $100,000 to basically pay your way into trading this. Price fluctuations. Future prices fluctuate based on supply and demand. That's the bid and ask orders that I just showed you with footprint levels, mirroring the underlying price asset movements. They can be volatile, offering both opportunities and risks. Okay, so let's run through why footprint charts they did work back in the day, but they don't work now, because this is where the algorithm will catch you because of the iceberg orders. So they can track where the majority of the bid orders are lying, but with candlesticks they cannot see that, because you're trading CFDs, and the candlesticks are literally just portraying the high, the medium, and the low. Okay, so that is why I highly suggest trading candlesticks, because it's simple, it's ease of use, and the market is already against you. Why complicate it so much? Okay, common misconceptions in trading. We're getting close to the finish line with regards to the notes, and then we're going to touch base on the practicality. Trading can be a challenging endeavor, and even experienced traders fall prey to certain misconceptions. Get rich quick schemes. Okay, you can make a lot of money in this game, you really can, but you have to have education, discipline, and you have to learn continuously. Understand that the market is changing, the market is ever changing. Okay, there is a lot of differences in the market every single day, and you need to learn to adapt. Predicting the market is the biggest mistake I made with regards to my ego. I tried to predict the market rather than react based off what I'm seeing. I had a massive ego. I said, no, the market is definitely going my way, but I tried to predict. Now the problem with that is, as soon as I made a loss, what got hurt? My trading account or my ego? 100% my ego. My trading account got hurt as well, yes, but my ego got hurt more. And what does that result in? That results in a lack of confidence. And a lack of confidence really is a killer in this game, because now I'm afraid of taking trades. I'm afraid of editing my trading plan. I'm afraid of even partaking in being a trader, because I really got smacked on the bum with this trade, and I really need to hone in on respecting the markets, respecting myself, understanding what I can personally do in this world of trading. And the only way I can do that is understand the perfect possibilities, and then react off from that. So that brings me to point number 3, which is trading on emotions. Now, it's super easy for me to say, don't trade with emotions, right? It's super easy for me to say that, because I'm sitting here, you're sitting on the other side of your computer, thanks to Zoom and YouTube. But the point is, it's easy for me to say that and sound super smart, but when you're in that trade and you've got a lot of money on the line, it's not that easy. So here's the thing, and this is what helped me, and we're going to touch base on it a little better further down the line. But and I know it's super boring, but if you have a trading plan, just a one-pager next to you, if you have a one-pager just next to you with your trading plan that says, listen MC, you're not trading 10 minutes before the news, or you're not trading any time frame lower than 15 minutes, or have you ticked your 7 steps of your strategy before entered? Just like 4 or 5 rules that you need to tick every single day. Of course you will improve over time. Of course, I'm 7 years down the line. Of course, if I rigorously follow my trading plan every single day, of course I'm going to improve. Of course I'm going to bring better numbers than the guy that's just trading off from his phone, just mellowing his way with his trading journey. Okay, and it becomes repetitive. Remember what I said: repetitive implementation, repetitive implementation, repetitive implementation. You need to put these things in because there's so many things against you in this market. So take your emotions out of it. There's no place for your emotions right over here. You need to have a systematic way of trading. That way you can make more money. That way you can disregard your emotions. You can disregard any negative factors in your trading. It's like a relationship, being married. I don't know how many married people in here. Shout out to you guys. But it's like you and your partner, you become as one. Okay, but I can't bring to the table my negative attributions. I can't bring my bad mouthing. I can't bring stuff that will bring my partner down. Now, you and your trading, you guys are partners. You can't bring negative aspects to the table because there's already bad stuff that's trying to eat at your relationship, guys. You cannot allow it. So protect it with all costs, because this trading thing is going to feed you, going to feed your family, going to feed other people outside of the picture. It's going to buy the dream car, going to buy the dream house. Hear what MC is telling you today, guys. It is possible. You just need to disregard the bad things and stop saying I'll do it tomorrow. Do it today. There's nothing stopping you except you. It's you that's the problem. It's me that was the problem. You need to take out these bad things and just freaking understand that MC is believing in you guys. Okay, so just do it and get to work. Okay, come on. The Holy Grail strategy, point number 4. There's no such thing. The Holy Grail lies in you. The edge lies in you, but you need to take out the bad. You need to shoot away the bad apples before you can start eating some good apples. Now, that, of course, we get to the very serious question that people might ask now. MC, you do the talk, but can you walk the walk? So this is my way how I trade, and I placed a picture of a Bloomberg terminal here for one reason. So yes, I do use trading indicators. Okay, yes, I do. I'm one of them. I'm one of those guys. I am. I mean, and I'm proud to say it, because my revelation came when I visited America. Yes, I am a Southas. I'm from South Africa, but my revelation came when I visited America, and I went to NYSE with very hard approach, and I saw on Bloomberg, I saw their terminals. You won't see one trading screen that does not have a Bloomberg terminal. Now, for those of you that don't know what a Bloomberg terminal is, it's the most popular trading terminal that provides fundamental driven key economic events for people to make their trading decisions. But underlying that, you can also create your own chart flow, your own technical indicator, stuff like that. But the first thing that pops up, or the most popular page that pops up on Bloomberg, is indicators and moving averages. Okay, you won't open a Bloomberg terminal without it showing you moving averages. Why? Because it's a very emotional driven indicator. So of course a lot of people are using it, but they're using it in the wrong way. So if you use it in the right way, of course you're going to make money off from it, because you're taking something that everyone is using, you're incorporating your edge into it, and you're making a shitload of money off from it. Of course it's going to work. Don't listen to what the other people say. Find something that works for you and stick with it, man. Understanding fundamentals, super important. You need to understand what drives the market. You need to understand, if you're trading indices, which companies are driving the price fluctuations. You need to understand interest rates. Very, very important, but that's a webinar for another day. Interest rates are very important. When Powell speaks, all of these, don't disregard these events. Now, if you don't know how to read up on these events, or you want to know more, I'll provide you guys with a link exactly where I look at my fundamentally driven move. Yes, I have a Bloomberg terminal as well, but I barely even use a thing, because I'm not disregarding fundamentals at all. Fundamentals are important, like I just said, but keep your trading simple. Understanding supply and demand, not the usual boring supply and demand, understanding like how the price fluctuates based on how you as a trader can where you fit into the picture. Now that brings us to our equilibrium. Equilibrium is a trading term that I use that and our members use that really hits a nail on the head and really works out perfectly. That comes in conjunction with our mad strat strategy. I'm going to show you guys how it works right now after our slides, and then also our daily count, understanding when and where the market will turn, which brings us to market structure and so much more. Okay, so I'd like you guys to let's take a breather. I'm going to hop onto my charts. Let me adjust my charts real quick. I'm going to run you guys through how I trade, how I look at the markets, my past trades of the past few weeks, and also upcoming trades of this week. Just give me a few minutes to get my charts up and running. No, actually just 1 minute, because I always keep my charts clean and simple. Everyone, I would really like you guys to get out on your charts, and then we can run through this. So I always say start on the daily time frame. Why? Because candlesticks provide the high, the middle, and the low. That's the level that brokers get, retail investors get, large traders get. These are the levels that everyone sees. So of course I want to see them as well. I want to see the key areas that everyone else sees. Okay, so I start on my daily time frame, but it's the beginning of the week now, so I start on my weekly time frame. So I only look on my weekly time frame on Mondays, Tuesdays, and Wednesdays. Why not after that? Because after Wednesdays it's obviously Thursday and Friday, but then the market usually flips during the 50%, which is our equilibrium. But you will see at the 50% of the candlestick, meaning if you're looking at a 1 hour candlestick and the market flips back, then we call that a candlestick flip, and that usually happens in the last 10 minutes of a candlestick. If it didn't happen at the half time of the candlestick, it will most likely happen at the last 10 minutes of the candlestick. So on my weekly time frame, I only look at my weekly time frame on the Mondays, Tuesdays, and Wednesdays. Now what I usually do is I literally just look at my candlesticks. I literally just look at the volume, and based off from this I can see that there's a heck ton of volume, and that's literally it. I just look at the volume and I draw my key levels, but I don't make them permanent. I only make them temporary. So I can see we have an exhaustion area here and an exhaustion area here. The reason I look at exhaustion areas is because, let me draw this real quick. Style, extend right. Okay. This is my candlestick. Let's extend this down a bit. So if we see that we have a wick going down over here, I mark out my areas. Why? Because remember when I spoke about footprint charts, there's an imbalance there because the market could not close down low, and it shot back up and it closed over here. This is my favorite thing. If I wasn't married, I would probably be married to this thing. This is called exhaustion areas. If I ever had to remarry again, it would be with exhaustion areas. Okay, because this shows buyers converting to sellers, sellers converting to buyers. So of course I want to see these areas and make my trading decisions off from them, because that then indicates that there's a lack of pressure, there's a lack of orders, and as soon as the market gets that level, the volume flips with it again. But I only take exhaustion areas at the first test. Okay, I don't take exhaustion areas at the second, third, or fourth test. Only at the first test. Let me explain to you guys. Let me show you guys what I mean. Going on the daily time frame, we can see we have an exhaustion area right over here. Let me just extend it again. Okay, and we have one here, but this one has been broken, so I'm not going to leave this one. I'm going to disregard it. Looking at my now, let me just reiterate, I'm not looking at exhaustion areas here at the history because we're on the daily chart. There's no point in me looking at exhaustion areas, but let me just show you guys how well it works. We tested exhaustion area, it came back up, and we tested another exhaustion area, which I'm going to show to you guys right now, and then it went back up again. Okay, so I'm not looking that far in history. I'm only looking at current price movements. Let's go down to the H4. Well, before we do that, let's look at our previous daily candlestick. So looking at our previous daily candlesticks, and what do? We mark out the high, we mark out the low, we mark out the close, the open, and the close. Then we mark out the 50% of the wick. Questions afterwards, guys, I promise we're going to run through everything. And then 50% of the wick. Okay, and then last but not least, my equilibrium. Okay, then we go down to the H4. Let's just leave these right here for now, and we look at the current price movements. So this is a pretty clean area looking left. I can see we broke here, but let's look at the exhaustion areas. We have an exhaustion area right over here at the top. This one right here, okay? And then we have a big exhaustion area, but I'm not gonna draw this exhaustion area because it will make my chart look very dirty. So let's go to the H2. And we look to the left, we can see we have an exhaustion area that we're currently on. Okay, for those of you that don't know what I'm looking at this wick right over here. So let's take a breather for a moment. Let's think about this. The market came back down, came back up, and then came back down again. This wick region right here, this is my exhaustion area. Okay, because that shows the market pushed up and then it came back down, could not handle the pressure going up, so sellers dragged it down. I've got some trapped buyers here at the top, and then we extended right. Why? Because we want to get those trapped buyers as well, or the trapped sellers, vice versa. So we're currently on an exhaustion area, so we will most likely come back down unless we're trading gold, so it's very volatile with regards to fundamental moves. So, but this area has been untested. So if we get a break of structure on the lower time frames, I'll most probably take a sell. But that's me jumping the gun. If we get a fundamentally driven move, we might break through and go up. Okay. Let's extend this. Where's my first exhaustion area? It's right over here. Let's go to H1, just confirm. Let me go to the left. So my exhaustion areas are pretty set. Now I'm not going and searching for new exhaustion areas because it's already been set in stone. I'm now then just refining it on the lower time frames. Now this does not always happen like that. I'm literally just hopping down from daily to the H1 because I want to refine. I want to make sure I've got it to the T correct. So exhaustion area right over here. This looks pretty damn clean. Let me go to the point of the chart. So we can see we did test it. Going down, I can see we have an exhaustion area at the bottom, but I see I have a very clean one here. Now this will also show if I go to the 30-minute. You see? So let's refine it. But before I refine it, what I like to do sometimes is I like to take my horizontal lines and then just write here. So then I take, let's just correct here. Because sometimes what the market likes to do is it will come back down if I left my if I left my horizontal lines and there's an exhaustion area, I will sometimes then just become lost with where am at the process. Okay, so I really love to stay fresh with the areas and stay in my zone with regards to where I am in the current market. Now, remember those daily levels that I drew in the beginning? My chart is starting to look super messy at the moment. So let's dissect that real quick. So my daily levels that I drew, I now want to see if they coincide with regards to my structure, with regards to my market structure. So over here I can see, all right, bam, we have an exhaustion area. That is sorted. I can delete these horizontal levels. Rule of thumb, only draw exhaustion areas down up until the 30-minute, nothing lower. Exhaustion areas, 30-minute, nothing lower. Okay, so we can see we have a very strong level over here, so I'm going to delete these two horizontal levels. I'm going to just keep my equilibrium on. This one I'm going to delete because we have a massive wick going down, and then this one I'm going to delete as well. So I'm just going to draw. Now I'm really not going to draw this massive exhaustion area right over here. I'm just going to create like that. Okay, because it looks clean, I'm happy with it, I'm feeling super comfortable. I can now say, okay, bet, these are my levels. So you guys can screenshot this, you guys can take notes, this is recorded, you guys can see, keep track with me for the rest of this week and see how it's formulating and how it's playing out. Got it? Okay. So the crucial steps to successful trading is obviously education. Invest in quality education to build a solid foundation in trading principles, market analysis, and risk management. Now this is a double-edged sword because education is everywhere on the internet, right? Even myself, I'm giving you guys free education because I know it's free. But how you implement it is what makes you a trader. How you implement these educational content tips that you get, that is what makes you a trader. I can give you the golden nugget to trading, and you'll make fire with it, I guess. It comes down to the trader and the hunger inside the trader. It comes down to the trader and the hunger inside the trader. You will never beat a man or a woman who is hungry to eat. Okay, so you have to, if I give you content, if I give you education, it's all down to you how you use it. That comes with backtesting, rigorous backtesting your trading strategies to validate their performance. Data collection is super important. I would suggest doing data collection before backtesting. This is how I do data collection. Okay, I go to my Microsoft Word. Let me type this out for you guys. I'll say MC said to draw exhaustion wicks on the daily down to M30. Okay, I will now analyze 100 pages worth of data to see if this is true. Okay, so now I go May 1st worked, May 2nd did not work because we now I'm just thumb sucking over here, but you have to really go and hone in on what I say and if this works for you. Why? Because then you put in the work. You didn't get something for free. You can feel that when you reach that number 1 on the world trading leaderboard, or you can buy a wife her new car, you can pay off your mama's debt, then you can feel you earned this. You deserve this. Nobody gave it to you. Nobody gave you handouts. You deserve this, damn it. It's no handouts. You worked your ass off. You gathered data. You backtested this, because the process is gather data and then After 100 pages of data, you then backtest it again, okay? Not just collecting data, you backtest it. And then you journal it if it works. For example, this exhaustion content I just gave you, go and data collect it for 100 days on any pair. And then you backtest it. You see if it works with your strategy. For example, let's say you like to trade fair value gaps or whatever the case might be. See if it works with your strategy that you trade with currently. And then you place it into your trading journal. After your trading journal, you then put it into your trading plan. For the guys that really want to take notes, this is the process. Data collection, okay, 100 pages on Microsoft Word. Then go to, this is my process, you can choose to follow it if you like. Data collection and then backtesting, and then journaling, there we go. That's the process. This is a process I use each and every day. For the backtesting software, I use Forex Live. It's a MetaTrader. It's a MetaTrader app. I use Forex. I think it's Forex Live, something like that. But just go on Google and search for Forex backtesting softwares. You need something, not the replay tool on TradingView. It is effective, but there's much more effective softwares out there. You need something that takes you back in history and then replays it. If someone knows the software, I gave it for free, I think last year or something. If someone knows the software I'm talking about, if you can please drop it in the chat so I can just call it out, and then it would really be helpful. Okay, so that's the process to follow. Common questions and misconceptions for the new traders. So first question, how much should I invest to trade? That's completely dependent to you. That's the general answer we get, right? But it's the truth, because I can't understand your risk. I don't understand your responsibilities, okay? But anything more than $300 is what I started with. This is not financial advice. Yeah, the software's name is Soft4FX. Okay, Soft4FX. That's the software I use. I'll drop it in my free Telegram group. I'll drop that software for free that I got, and then you guys can go ahead and backtest it. So how much should I invest to trade? Anything $300 and up. It's not financial advice. It's just what I did. I borrowed $300 from my dad, and that's how I went, for the guys that know my story. Can I become a millionaire overnight? Yes, but it will take you 5 to 10 years to sharpen your blade. It's that thing of, give me 7 hours to chop down a tree and I'll sharpen my axe the first 6 hours. Something cliche like that. So you literally can hit a big trade if you've got enough capital and you're fine with your risk, and you hit that trade overnight. But you have to get the right education, the right content, and you'll make so much money you don't know how to do it with it. But it will come with hard work. It's not going to happen overnight. You're not going to learn this tonight and then tomorrow you'll be a millionaire. It's not going to work like that. I'm sorry to burst your bubble. I work full time. When will I be able to trade? So this is what I do, right? This is what I do as a full-time dad, driving to school and back, looking after myself and stuff, like looking after my kids, stuff like that. I set alarms on my phone every last 10 minutes of an hourly candle. So let's say it's 10 a.m. now. I set an alert for 9:50, and then the alert goes off. It says, look at the charts. Then I just literally look at the charts. It takes you 1 minute, guys. How bad do you want this? Is 1 minute really too much for you who wants to chase your dreams? Yes, I understand you have a boss, and yes, I understand that there's people watching over you, but your dreams are bigger. Your drive is bigger. Your hunger is bigger. You are bigger. So you need to understand that, and you need to start thinking like that. Walk in like you own the damn place. Okay, put on your alarms. Do what you gotta do today, not tomorrow, not next week. After this webinar, I want you to set your alarms, set your alerts, whatever you gotta do. If you've got a bad habit, cancel it out. If you're on TikTok too much, delete it. If you're on Facebook too much, remove it. Set your alarms, put your trading view in your damn face. Let it be in your face. And then you can consistently just grow. Repetitive implementation. Stop saying tomorrow I will set alarms like Matt said. No, do it now, do it repetitive, stay consistent with it. I want to get started with trading. What do I do? Can you help me? Yes, my brother, my sister, I've literally got a link to a free training course where you can start out. It's in the description. Start with that course. I will track your progress. Reach out to me if you've got any questions, and then let's see if you're ready for the real deal. I don't have enough money to put into a trading account. Now, this is a difficult one, but it is a double-edged sword once again, like anything in the world of trading. Okay, because as long as you upgrade your knowledge in this field, you become educated with this, then a blessing will come. I will most probably see your talent, someone else will see your talent, and we will bless you with a funded account. I've given away a ton of funded accounts in history. A lot of people have not used it, a lot of people have used it. So sell some shit. Yeah. I sold my PlayStation. Do what you've got to do, but first get educated, get talented, get worked out. Just get going. Okay, I'm not going to invest in someone that's playing around on their phone watching TikToks or doing some crazy stuff. Okay, it's the truth. I want to see someone that has drive. Investors out there want to see someone that has drive. Okay, you'll get blessed. So like God sees your hard work, He sees your talent, you know it, you see it. So a blessing will come. Okay, just put your head down and continue working and have faith. People will recognize you, people will see you. I've been trading for a few years now, but I'm still not profitable. What am I doing wrong? Well, that, my friend, we have created a very special slide for you. How do I formulate a strategy? We've created a slide for that as well. Okay, trading with prop firms. Are you flipping the switch or are they flipping you? Now let's get down to business with prop firms real quick. I own my own prop firm, right? So I want you to understand what I'm saying, and I want you to understand it true. We have different channels, yes, but if you are trading with a legitimate prop firm, you will understand that you will consistently be A booked. It does not make any sense to remain on B book. I want to see talent. People want to see talent. Okay, so how are you going to do that? I don't care about people who's making thousands of dollars overnight and then just blowing it next month, because it's going to happen. I care about people who are consistent, growing each and every day. So you need to be consistent. Consistency is the name of the game. Even the Bible says, easy come, easy go. Okay, so you don't want something that comes easy and goes easy, because you'll be so stressed. Your future will not be guaranteed. Okay, so you need to have something that's consistent. You need to have something that, yes, if you make a loss, it's okay. Okay, you need to have something. For example, my risk management. I used to be the laughing stock because I put my stop as a break even for 10 pips. And then, I mean, the time just ruled it out to be true and to be something that has really been saving so many accounts, so many traders. It's not the 10 pips break-even thing that is saving me, okay? It is the fact that I can be rest assured that my ego won't get hurt, my trading account won't get hurt, and my confidence won't get hurt, okay? So that's the thing, because at 10 pips, I know my family is taken care of, I'm taken care of, everyone is taken care of. The market might reverse against me, but that's okay because I'm taken care of. So trading with a prop firm, you need to be consistent. I don't care if you're down 3%, you're down 4%. Believe in yourself, damn it. You can do this. You can really just break through, but you won't be able to break through that barrier if you don't have the right steps. It's not going to happen overnight. You need to start implementing the correct steps today. I've been trading a few years now, but I'm still not profitable. Please help. Okay, so let's look at how you can incorporate the winning steps for you to become quote unquote profitable. Step number 1, identify the challenges. The truth is, are you on your phone to consume, or are you on your phone to learn and create? Are you sitting in front of your screens to look at what MC is doing, or are you sitting at the screen to learn what MC is telling you to do? Okay, you need to identify these challenges. What are your urges? Are you urged to sit and look at other people the whole day, or backtest a bunch of different strategies, or are you prepared to focus on your strengths? My pastor told me this the other day. He said that a lot of people are too focused on their weaknesses that they forget about their strengths. So if you build up your weaknesses, you become a very mediocre person. The same is true with trading. You become a very mediocre trader because you're trying to boost up your weaknesses. Now, I'm not saying that you should disregard your weaknesses. You should focus on them, yes, but you should just keep your eye on them and keep them at bay. Keep the wolves locked up. But your strengths, don't disregard your strengths, okay? If you're good at, your confidence is so great that you can maybe trade bigger lot sizes, do it. There's nothing stopping you. But you have to understand that it's not going to come on its own. You need to understand that you need to focus on your strengths, improve your strengths, but keep the wolves at bay. Okay, identify your challenges. Are you struggling with poor risk management, or you don't really understand what you're trading? Put your ego aside and understand what you're really doing wrong. Point number 2, analyze and adjust. Okay, so you've now found your problem. For me, I was trading with an ego. I was over leveraging and I was afraid of being wrong. So I saw this problem. I analyzed it. I saw why I feel this way, and it became an internal problem. So I adjusted it by humbling myself as a human being. I started getting my house right in my heart first, and then exponentially everything outside will grow. Humble yourself, okay? Make these changes, and yes, if this goes with you changing yourself completely as a person, I'm not condoning that, but I'm saying do what you need to do to become a better trader, because this is much bigger than trading. This is you creating a legacy for your family. Point number 3, building solid foundations. Develop a comprehensive, adaptable trading plan. So this is my trading plan. I'm going to put it in the chat real quick. My trading plan in the chat. So if you guys want my trading plan, this is my trading plan. I put it in the chat for you guys to use. Use it as reference, but build your own trading plan based off from that. Okay, it's highly advisable to you need to have a trading plan. You need to have something that's keeping you accountable, because without accountability, evil and flakiness comes in. You will then just start breaking your own rules, start losing money, and you're the only one to blame. Point number 4, cultivate consistency. Okay, so you've now identified the problem. You've analyzed the problem and you've adjusted it. You've now implemented your trading plan with regards to this problem. Now, consistent implementation, repetitive implementation. You now have to keep track of your trading plan every day. You now have to disregard your problems and your challenges every day. And then finally, point number 5 is achieve profitability, because you've addressed your root causes, you've implemented the best practices, and maintaining a consistent analytical approach. So these are the 5 steps that you need to have an overall templative view of your problems and how you can become a profitable trader. Okay, so last but not least, the bonus, how to build your own strategy. This comes with regards to me saying what I said in the beginning. I cannot force you to do anything in this world. You need to have a drive on your own. So you need to understand what's your responsibilities. What type of trader are you? I'm here to give you the guideline. I'm here to force you to the water, but you need to literally just open your mouth and drink. I'm here to give you every single strategy that has been working for me. I've been trading, a lot of people laugh at this, but I've literally been trading strategies where I try and look at the stars that align. I've been trading fair value gaps. I've been trading indicators, algorithms. I've been trading every single thing that there possibly is to trade, and I've found something that works for me. With that being said, let's analyze NAS100 and US30 real quick, and we can have a look at the potential trades for the coming week, and we can see, you can see just how I have honed in on my thought process. So not a lot of thoughts, not a lot of talking going into this with regards to my approach, because we already went through that. So we're looking at the weekly first, and we can see we closed super bullish. Okay, going down to the daily, what am I doing on the daily time frame? I'm marking out my daily levels. So let's do that real quick. Daily high, daily low, daily close. I'm not taking my 50% because the wick is not that big. Okay, and then my equilibrium. Okay, we got that. Now on the H4, what do we do on the H4? We track out our exhaustion areas. So I've got an exhaustion area over there. Can we see any exhaustion areas to the left? No, of course not, because this is our ultimate high. So I've got an exhaustion area down here. Am I looking at exhaustion areas going further left? No, I'm not. I really just want to look at the current exhaustion area. So having a look at that, I want to see if it lines up with the current exhaustion areas that I have, and I can see that it does. Now this brings me to my daily levels, which obviously looks super confusing, and it makes my chart just look super flaky. So I'm removing this one right over here. I'm removing these two because it is an exhaustion area down at the bottom, and this is my equilibrium. Okay, exhaustion and exhaustion area. Now, of course, I look at the lower time frames. Of course I do that, but there's no entry for me yet. So there's no exhaustion area, there's no high time frame confluence. If we come here, for example, at my high time frame exhaustion area, of course I will then look for a break of structure or some sort of confluence. But first things first, you need to have a trade signal, and then you get a trade entry. So you get a trade signal first, and then you get a trade entry. So the market being here on my exhaustion area on the higher time frames, you need to have a trade, let's get my arrow here, you need to have a trade entry then when it breaks over here, or it lines up with any sort of confluence, the last 10-minute rule, the break of structure, the moving averages aligning with you, a bunch of these things that you need to use in confluence. Okay, so for example, the trade on NAS100 in the week, We had a perfect rejection with all other things aligning. Going to the 15-minute time frame, I'm looking at it on the 15-minute time frame, we can see that we had this wick rejection over here, and we have a break of structure going to the top side after NFP. Okay, so everything has to align one way or another. You have to have 7 confluences. You need to have, I like to look at these 7 confluences for the guys taking notes. These are my 7 confluences that I need to have. Okay, so we have created structure at the bottom, alright, for the time being. So we need to at least make a break of structure going down and then coming back up, and then some sort of confluence, for example the test of the moving average with the break of structure on the lower time frame, such as the 5-minute, and then we can anticipate sales going down. But that is a highly unlikely thing because the overall volume is bullish. But it's bullish, but it can still be just a break of structure going down to get some volume and then continue going up again. Okay, let's look at US 30. US 30 is probably going to be the same thing. You guys can start posting your questions, please. If you guys have any questions, just post in the chat so we can run through them. I really love to address your guys' questions. While you guys thinking of your questions, let me plot out my analysis for this. Day count, okay. So there's a high request of the day count. My bad. Okay, so US 30 is pretty much the same thing with regards to Nasdaq. It just maybe looks different. It looks completely different. So I'm looking for a break of structure. So break of structure, I'm looking for the market to come down, come back up, and then boom, break the structure over here. That's what I'm looking for. Okay, and then we can look at this exhaustion area to take buys up again. Let's look at the day count. So with the day count, we get a thing that I like. It is just a basic overall rule that I like to view structure with. Okay, I like to view structure with my day count because I saw that a lot of my members are struggling with structure. They are struggling with regards to finding, are we in a bullish trend or a bearish trend. So with a day count, we find 3 days. Now, if it's confusing, luckily this is being recorded. I have a Monday, which is your day 1, Tuesday, which is your day 2. I learned this from Steve Morrow, but I just incorporated my own methods. Okay, you get it day 1, day 2, day 3. But on the other end of this, you get a daily cycle, which is your day 1, day 2, day 3. Now on top of this, you get the special days, which is a red setup day, green setup day, false break reversal. Now after that, you get an inside day. Okay, so this is how it works. A day 1, day 2, day 3 aligns with a red setup day, green setup day, false break reversal. But the false break reversal, red setup day, green setup day cannot align with the day 1, day 2, day 3. It cannot align without them. The Monday, Tuesday, Wednesday aligns with the day 1, day 2, day 3. But the day 1, day 2, day 3 cannot align without the Monday, Tuesday, Wednesday. So this is the process. It has to be a Monday, Tuesday, Wednesday, day 1, day 2, day 3 first. And then we get our day 1, day 2, day 3. And then after that, it has to be a red setup day, green setup day, false break reversal. So it starts at Monday, Tuesday, Wednesday. Day 1, day 2, day 3 acts as confluence. And then red setup day, green setup day, false break reversal is our entry days. So the day 1, day 2, day 3 is our day cycle. This is confluence. Okay, and an inside day So for the guys taking notes, this is how it works. You have your Monday, Tuesday, Wednesday, and Monday will always be a day 1 in the day count. A Tuesday will always be a day 2, and a Wednesday will always be a day 3. So this means on Wednesdays you will have bigger moves. Then a day 1, day 2, day 3, that's part of your cycle. So that we'll jump into it now, but day 1 is usually after day 1 is usually on a red setup day or green setup day, or after a false break reversal. A day 3 is usually a false break reversal. A day 3 is also usually a green setup day or a red setup day. But if a red setup day or a green setup day happens on a day 2, that then becomes your entry day, and then a day 1, day 2, day 3. So it's a process. But if you have a day 3 on the daily cycle and a day 3 on the daily count, then you have a massive blowout move. Okay, so it's a very convenient way to look at where you are in the market, and if you follow this vigorously, you'll find that you will never be lost in the markets ever again. Let's have a look at an example. So what I'm going to do is I'm going to remove my EMA. Tell me when to stop. The first person that tells me when to stop in the chat, well, it has to be on the 15-minute. Okay, tell me when to stop. Okay, geez, anytime now. First person in the chat that tells me when to stop, I'll stop, and then we can dissect it from there. Okay, so we stopped over here. Okay, so first thing I do when I get to the market is I look at my day 1, day 2, day 3 on my daily count. Okay, so this is over here. So we're using this level over here. Monday, Tuesday, Wednesday, Thursday, Friday, and we're using our Friday. Okay, so Monday, Tuesday, Wednesday, okay, if you thought this was confusing, it's going to get even more confusing. Wednesday is your day 3, but also day 1. Okay, it's a new cycle that starts. So Thursday is then your day 2. Friday is your day 3. So it's Monday day 1, Tuesday day 2, Wednesday is day 3, but also day 1, Thursday is day 2, Friday is day 3. Okay, that's set in stone. It's like this always, 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 always. So now we have to spot patterns and see what type of day it is to see if it's a day 1, day 2, day 3. So on a day 3 is usually our entry days. Or if we have like a false break reversal before that, or a green setup day, a red setup day, green setup day, that's all dependent on what type of pattern we see. So let's have a look. I'm on the 15-minute and we can see we're in a downtrend. I'm just talking to myself at the moment. Inside day, inside false break, but it's a false break of the previous day going down. Okay, here we go. Wednesday, Thursday, Friday. Here we go. So a false break reversal, the criteria of a false break reversal is this. A false break reversal has to break out of the previous week high or low. Okay, false break reversal has to break out of the previous week high or low and then revert back inside of the range. You guys got that? So it has to break out and then come back in. That's exactly what we had. We had the market break out, come back in. So false break reversal is my favorite pattern. So this is our day 1, false break reversal. Okay. An inside day does not count as a day. So that means that the day after an inside day is our new day. So that's our day 2. So that is exactly what we had over here. This is our high of the day. This is our low of the day. So this was our inside day. So this is not a day. I'm not taking trades here. So that is why we did not have a blowout move on day 2. Now we get in the money. We get our day 3. Okay, look how powerful this is. Day 3. So on our day 3, we want to take an entry based off from our false break reversal. Why? Because our false break reversal was our entering move. Now keep in mind, I'm not taking any other confluences. I'm not looking at exhaustion areas. I'm not looking at my moving averages. I'm not looking at my daily volume. I'm not looking at anything else. For example purposes, I'm literally just looking at my day count, and you can see how powerful this is. But let me include an exhaustion area because we were talking about that with regards to our webinar today. So when you look at the daily count, the highs and the lows of the days are super important, and the highs and the lows of the week. So literally what I'm doing is I'm drawing my highs and my lows until it gets broken or tested. Okay, this one right over here. This one right over here. Okay. Look at how powerful this is. Tuesday, we created a high. On Monday, we created a high first, but then on Tuesday, we created a high. Our high of the week is still Monday. Okay. Now on a day 3, you will find the high or the low being broken, and then the market reverting with that trend. So we have our day 1. Inside day, it's irrelevant, it doesn't matter, but just have a look at how it hits the low of the day, swoops back up, hits the high of the day again, does not hit the high of the wick, but it hits the high of the previous day, as you guys can see with an exhaustion area, hits the high again, reverts back down, and then it continues with the trend with our day 3. So we have Asia creating highs, London creating highs as well. So you can literally draw your highs of NY session, highs. It coincides with our London session highs. Okay, you can look at this everywhere. NY session lows coincides with our next day NY session lows. Okay, so it was broken, false break reversal of the day. There's not a false break reversal of the week. This is just a false break reversal pattern. It's not something I'm trading. But the market then reverts back up, shoots the high of Tuesday of the inside day to take out the sellers. That's where the exhaustion we came from. But let me delete this because it's getting super flaky. And then the market came back down. To where did the market come back down, guys? The market came back down to wick out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, bullish engulfing. Your entry is here on a bullish engulfing, reverting back up. And what did I say about a false break reversal? False break reversal pattern hits the high of the week, gives a rejection. Sellers think, all right, it's game time because it gives a rejection. And then consolidation, 1, 2, 3, 4 candles, hits the high of the week and then shoots back up. Super simple. Where does it shoot back up to? To an exhaustion area. Clean, simple, nothing complicated. It's literally as is. I'm giving this to you guys as a very great analysis example. Keeping it simple, understanding when and where the market will shoot, understanding these key concepts, educational content, and then just running with it, and then just doing your thing each and every day. Okay, so questions. Let's run through the questions. I did this dissect the daily count. So everyone is asking me for the 10-minute candlestick rule. Now 10-minute candlestick rule is something that really caught flame with one of my webinars, and what I explained was this. Back in the day when they had open outcry, they had a thing called lunch breaks. Okay, so they had a thing called lunch breaks, and this would mean that when they had these lunch breaks, they had people coming in and out of the markets. Okay, so sorry, the chat is going crazy, but stop loss below the low of the week because we created a new low. And then obviously I'm targeting my high of the week. So literally a 7 risk to reward ratio. This works on every pair, every instrument, everything that's tradable because it's supply and demand. Okay. So the 10-minute candlestick came in when people said that they wanted breaks in between. So at the last 10 minutes of a candle, this is very simple. You'll see the candlestick flip if it didn't flip at the half of the candle. So that is what this, and this is how people try and predict fundamental moves, but you cannot do this with fundamentals. So let's say I have 1 hour. So this is the rule of thumb. It looks like this. The market will go up, and then if it does not flip back down within 30 minutes, so this is 15 minutes, 15 minutes, there's 4 15 minutes in an hour, right? So if it does not flip back down and it continues with the trend, let's say it wiggles around here and it continues with the trend. This is a trend on a lower time frame, right? It will, at the last 10 minutes of the hourly candle, then just break structure and go down. This that I just drew to you right now is literally just 1 hour candlestick, but it will be on the lower time frames. So it will be most likely like a 5 minute 5 minute time frame or a 15-minute time frame, whatever the case might be, but they revert it because this is a trend. This is for the scalpers, triggering out lower time frame traders, thinking that the market is going to revert bullish, but then at the last 10 minutes to grab the liquidity of the hourly time frame or of the hourly traders, the market will then just break structure, do whatever technical analysis it is at the time being, and then revert with the overall trend. Okay, so let's say the trend is bullish, it will revert bearish at the last 10 minutes. If it didn't revert in the first 30 minutes or the half time, it will revert at the last 10 minutes because the market will then make you think it's not reversing and then just reverse your way. Come on, to who has that happened? You will think that the market will not hit your stop loss, it will go in your favor again, and then boom, hit your stop loss. That's what happens because they count on the last 10 minutes. So your only solution to this is plain and simple. I always say enter at candle closure. That is why I say, guys, I have different rules, but these rules comes with different methods. There's certain methods that you have to implement with regards. You cannot just go and implement anything. You have to question everything. Why am I putting in certain things? Why am I doing what I'm doing? Okay, so it has to make sense. This happens on every 1 hour candle. Yes, true. 10 minutes before the candlestick close, this happens. If it didn't flip a half time, it doesn't happen on the 1 hour only. It happens on the 4 hour, the 2 hour, the daily. It happens on every one of them. But then you obviously just have to adjust that. For example, the half of the 4 hour will be a 2 hour, but then the half of a 2 hour will be an hour. Okay, that's why I take the hour, because it's the simplest one. It really gets complex when you look at the higher time frames. Last question is, can there be 2 consecutive inside days? So this means that day 2 will be on Thursday. Yes, correct. There can be 2 consecutive inside days. That then means that if you have 2 day 3, so we have a day 3 on a Wednesday, it means you're going to make some sick money. Okay. Last but not least, as I promised you guys, the giveaway details. So I will be giving away 3 $100,000 accounts, and I'll be giving away $10,000 in cash. There's an interesting question. What are your thoughts on trading order blocks, fair value gaps, and so forth? No, it's BS, just because of what I explained with CFDs. Order blocks, the futures platforms and the market makers, they can't see your orders because you're trading unregulated markets. This was my whole goal of this webinar, so that you guys can see that. So with regards to the giveaway, 3 $100,000 prop firm accounts and $10,000 in cash, all you have to do is literally for me to receive the feedback that I've been giving, and you don't have to pay a cent, you don't have to do anything. Is literally take this link of this YouTube video, take a screenshot of this webinar or even this image, post it on your social media, tag me, and then you're in the shortlist. That's it. Okay, so take this link of this YouTube video, a photo of MC or this webinar, post it on your social media and tag me, and then the winners will be announced 2 weeks from now. Okay, so with that being said, family, friends, thank you so much for tuning in. I really just want you guys to take this seriously, take this knowledge seriously. I've given up the time to explain to you guys and to really provide you guys to help you work on your future, not just mine. As I'm explaining, I'm getting better as well, yes, but this is for you. Don't think you're just a number, don't think you're just a statistic. Reach out to me, talk to me. I'm here for you guys, I'm here to help you. I'm here to give you guys lessons that I learned from, experiences that I learned from. Okay, So thank you everyone for tuning in. I really have massive love and appreciation for you guys. Thank you so much for everything. Thank you for the love and support. Let me know what you guys think of this, and then we'll be talking soon. Stay blessed, and then have a great week. We'll talk soon.